What is going on, guys? Today we have a very exciting video for you. We are talking about a stock that I am actively adding to my long-term portfolio, and that is Google stock. What we're going to be doing in this video is we are going to take a look at Google's valuation. We're going to take a look at where it's been in the past, and we are going to make a prediction of where it could potentially be going in the future. And then we're also going to look at where analysts think it's going in the future, because there's a lot of analysts out there that cover this stock, and it's important to look at the numbers, look at the math, and see where people are thinking this stock will go over time. So if you enjoy the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. So Friday, we had a terrible day in the market and Google completely got destroyed. They were down 5.41% on the day, which is an absolutely insane move for a company that has a market cap of a 1.54. But the stock market, the S&P 500, was down around 3%. So it's not very surprising that a company like Google and a lot of these big dogs got destroyed here on Friday, especially with the news from the Fed and everything going on. So overall, in the last week, they were down 4.17%. In the last month, down 2.41%. And in the last 6 months, down 18.30%. So we can kind of go back and look at where they've kind of been for all-time highs, and we can see the 52-week high is 151.55 cents, and we are down 23, almost 24% in the last year, and that isn't even from all-time highs. That's from around $144. So you have another $6-7 on top of that, that would get it up to, around where its all-time highs are. So overall, Google in the long term has had a huge upward trend, but let's jump in and look at its current valuation. For valuation, I tend to always look at Yahoo Finance. Yahoo Finance has a lot of numbers. They track the numbers over time. It's clean, good look. But if you look at other sites, you will see and sometimes see differences in these numbers. So keep that in mind. But here we have on Yahoo Finance, we have a current forward PE ratio of 21.28, and you can see where it's kind of gone over time. So it was down back in June when the market was bottoming out. It was down around 19.23, and in the last kind of year, it's been all the way as high as 31.15. So that's important to note. Last June when the market was really starting to hit its peak, and since last June of 2021, the markets kind of came down. A lot of the small tech companies started suffering first, and then big tech hasn't really been hit until this year. So overall, the number that's important to us here is this 21.28 number that gives us the current forward PE ratio. And here we have a website called Macro Trends. So they have trends here, and you can see the trend of the stock price. You can see its net EPS and how it's grown over the years. And then important to us, we can see the PE ratio. So I love looking at the PE ratio and how it's changed over time. So what we can see, ignoring some of these fluctuations, right? Obviously in here, they had a dip in their earnings and really the stock price kind of stayed the same. So the PE ratio shot up. But overall, we can see that some of these kind of time periods when the PE ratio gets up higher, it's getting around, a 30 PE. And then some of these dips and valleys, it's around a 25, conservatively up to maybe a 28. So we are going to use those numbers of a 25 to a 30 to basically run a valuation of where the stock price could go if we return to similar PE ratios in the near future. And this is the calculation that I'm talking about. And I've done this in plenty of videos. I believe I've even done this on Google stock, but the market's constantly changing. And the last time I made a video on Google was, maybe 6 to 8 months ago. So it's been quite a while, and obviously the market's changed since then. And what we can see here is the current price of Google. So if we jump back to here, we can see Google is at $110.34. So when we put that in here, and then we have the current PE ratio, like we talked about before, that's from Yahoo Finance, the forward PE ratio of 21.28. And then we can create a ratio with the potential PE ratios that we see in the future. So here we have a 25 PE ratio. So what we do is we run a quick proportion calculation here. So we are taking the current price multiplied by the potential PE ratio divided by the current PE ratio. And what we get is a price of $129.63, which honestly is not very out of the realm of possibility. Just a couple weeks ago, we saw Google kind of bounce back up to around 120. And this is only $10 more, which of course the Google stock, that's like a 5 to 10% move. But overall, we're looking at, if the stock were to go up to this $129, a 17.48% move. So very good there. And if the stock were to go to a PE ratio of 30, which again is not out of the realm of possibility, we saw on that last chart that Google has gone, even above a 30 PE ratio, up to 32s, 35s, anywhere kind of in there. So if we look at the valuation, if it were to go up to a 30 PE ratio with everything staying the same with the business, we would have a price of $155.55, which would be almost a 41% return, which is an awesome return on your money, especially if we're talking about, Google achieving a 25 to 30 P ratio in the span of, the next year or so. And finally, what we have here is the Wall Street Journal. So the Wall Street Journal, they cover a lot of stocks. And what's very good about the Wall Street Journal is they have a lot of analysts covering these stocks. So you can see down here, 3 months ago, what analysts were predicting, 1 month ago, what analysts were saying, and then the current, atmosphere around the stock, what analysts are saying. So currently we have 38 analysts saying that Google is a buy. So that is a lot of analysts putting a lot of money where their mouth is and saying that Google stock is a buy. And then we have 8 that are saying overweight, and we have 3 that are saying that it is a hold. And the big thing is, right, you always want to look at the law of large numbers. The more analysts and more people that you can get to, predict where a stock price is going to go, the more likely that the stock price will end up going there. Basically, that's what the stock market is. It's real-time feedback as to where people value a company, right? So the more analysts that you can get to value something, the better prediction that you're going to have going forward. And what we see here is where their price predictions are at. So for a high, we have $165 for a price target. For the median, we have $140. And then for the low, we have $113, which is still above where our current price is at, which this is very low for Google. I'm surprised that someone has a price target of $113. But anyways, for average, we have $141.86. So if we jump back over in here, we can see that a $141.86 price target from the current price would actually result in a little over 28.5% return, which again is a monster return. So if you look at all 3 of these, right, and you look at a conservative estimate, maybe you're only making 20% this year. You look at what analysts are saying, and you're maybe making 30% this year. And then if, things start turning around and we see interest rates start to maybe come down a little bit in 2023, then I don't think a 30 PE ratio is out of the realm of possibility. And you could have a 41% return over the span of the next year. So Google, in my opinion, is a great company. I personally do own the stock, and I am adding more to my position as we speak, especially if it keeps dropping more. I would love to start loading the boat if it dropped under $100, because that would be absolutely insane. So again, I hope you enjoyed the video. I hope you got something out of this video. If you did, make sure you drop a comment down below. Make sure you leave a like if you like the video. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.